Hello everybody, welcome back to my channel. My name is Jake and today I just want to talk about catching the falling knife. So if you ever heard this term with stocks, it is referring to when the stock market is crashing and people are selling off or rotating, as they're saying recently, that the stocks that you own are crashing and you're waiting for the bottom, trying to find that bottom. And if you miss the bottom, you're catching the blade of that knife, so it would hurt even more because the stock will continue to fall, right? It's kind of like a whole mental game when you get into the stock market, right? You want to remove, again, your emotions out of buying stocks. Now, that can be very difficult when you have a lot of money in your account and you just see it declining, right? But when it comes to investing consistently over the long term, if you are buying in every single, say, let's just say Friday, right? If you're buying every single Friday and your dollar cost averaging into these stocks, you will, over the long run, even out those dips and those rises, right? So catching the falling knife, in my opinion, typically doesn't exist. And I've heard the term just the other day that you can be catching a falling handle. So like, if you truly believe in the stocks that you are investing in, you aren't in it to make a quick buck and you're looking long term, right? There isn't a blade on that knife. You are not catching a falling knife. You believe in this company. You think it's going to take off or it's continue to rise, or this fall is temporary. Now, we've seen in the last week that there was a quote unquote rotation, a correction out of tech and into recovery. And this had a lot to do with the bond yields that were out there being above 1.5, right? But what just happened in the past couple of days here now is we rotated back into tech because tech became such a good deal. Now, if you stayed in tech and you invested, doubled down on your investments, right? You are now riding that wave higher. And in the moment, it sucks to do that kind of thing. But me personally, I did. I invested quite a bit of money and now I'm out of money, right? No, but I invested a ton of money when the market was crashing again because I was like, this is the time to invest, right? You're always going to hear the people saying, be greedy when people are fearful, be fearful when people are greedy, right? That is an overused term. I know, I get that, but it still reigns true. Like when everything is selling off, if you have strong convictions about the stock that you are invested in, I would strongly suggest you double down on it. And for me personally, every single dip that I've bought into, I have crazy reservations in even doing it, but I know in long term it's going to be good for me. And every single time I have, especially recently, it's paid off. I've gotten great deals on stocks that are pretty expensive in my book, and now I'm riding that wave back up, and it's crushing it when the stocks rise so high, and there's a little bit of a dip. It's great to buy because you get to ride that wave. All the pain that you felt in that moment is replaced by tons of euphoria when you ride that wave up. Now, again, when the wave keeps going down, it can feel like there are a lot of odds stacked against you. So if you are in margin, I would suggest that you try to keep your margin low, because if you buy a margin and the stock market crashes, right, you're kind of squishing yourself into a smaller box of where your account can be at. So just keep that in mind as well. Another thing I will say when it comes to buying a margin, you want to make sure you have enough money to pay off your margin, especially if you're buying these dips. Because again, like I said, you squish yourself into a smaller box. Your stock portfolio is declining, but your margin that you're using is rising. So you are running out of room to be able to continue in that kind of buying fashion. And I know quite a few people right now that have margin out. I use margin personally. I try to keep it low and I try to pay it off. And fortunately for me, I am a dividend investor, so my margin gets paid off for me essentially. But what I would say is when you are catching that falling knife per se, make sure you feel the way you you check your emotions. What are you feeling in that moment? Do you have money to invest? If you lose this money, is it going to ruin your life, right? If you can handle losing a little bit of money, your risk tolerance is high, I would say buy on red. I personally try to buy on every single red day if it's over a 1% loss in my portfolio, sometimes even less than that. But it also depends on what stocks are falling in a particular day. But you want to make sure you are buying those dips because it is going to pay off in the long run, because there's always going to be a new record high. There's always going to be a dip. There's always going to be a correction. It's just how the stock market moves, right? You have people going up and people going down, selling off. But it's hard as a retail investor to have that risk tolerance because every dollar counts, right? We're not these big hedge funds that are actually selling off their tech when it's super high and buying back in when it's low. We don't have that kind of capital to be able to manipulate the market in such a way, right? Unless, of course, we all band together. But that's a GameStop joke right there. But you want to make sure you're buying those dips. That is the bottom line, right? Now, I would say if you did buy this last dip, like hopefully you did, you have seen these payoffs in the last couple of days. They have really been taken off, even with the bond, new bonds being sold, yesterday and today, I believe. They have not affected the market at all. They've been bought up just normally. They haven't had to raise the yield at all. It's kind of stayed steady. And we just got the new stimulus package passed. So that way, that is all being priced into the market, right? People are going to flood that money directly into the market. And if that's you, that's perfectly fine. It's your money. Do what you want with it. But that is helping keep the market moving in the correct way, right? So, I don't know. This is just kind of something that I've been tossing around in my own head, trying to keep my emotions out of the market, keep buying those dips, even though it sucks. If I could have bought back March 2020 even more, I would have. But I was just trying to figure this whole thing out, right? But this was just something I wanted to ramble about. I've been up since 3 a.m. today, and I got to get up at 3 a.m. tomorrow to work. My brain's not really working the way I wish it would. But with that being said, guys, check the links down below. My Instagram's down there. That's been doing insanely well. So everybody's helped me out on there. I appreciate that. Make sure you're subscribed if you're not, because this channel is actually doing a lot better than I expected this year, which is awesome. I thank you guys so much for that. And make sure you check all the links down in the description. My Yada, my Robinhood, my Acorn, all those fun things, right? But with that being said, guys, I hope you bought the dip. I hope you're in the green today and the past couple days here. But with that being said, peace.